You are standing on the sidelines of a Saturday morning youth soccer tournament. The air is crisp, the coffee in your hand is predictably overpriced, and the casual conversations happening around you are slowly suffocating you. To your left, a couple is debating whether to put a custom heated pool in their backyard or completely gut and remodel their kitchen. To your right, another parent is loudly complaining about the logistical nightmare of shipping their family of 5 to a private villa in Tuscany for a 3-week summer vacation. Everyone around you seems to have effortlessly glided into this prosperous, picture-perfect version of middle age. You nod, you smile, and you offer polite, practiced reactions. But internally, your stomach is tied in a brutal knot. You are doing silent mental gymnastics just trying to figure out how you are going to pay for a set of 4 new tires on your 8-year-old car, let alone fund a retirement that suddenly feels like it is rushing toward you at a terrifying speed. You are 40 years old. You have worked incredibly hard for 2 decades. You have played by the rules society handed you. Yet, looking at the financial scoreboard of life, you feel an overwhelming silent shame. You feel like you have fundamentally failed the money game, and worse, you believe the clock has simply run out. You are convinced that because you did not start aggressively investing your money in your early 20s, the magical wealth-building window of compounding interest has permanently slammed shut. But what if I told you that the narrative you are torturing yourself with right now is a complete fabrication? What if I told you that starting your serious wealth-building journey at age 40 is not a tragic disadvantage, but rather a hidden, explosive superpower that the traditional financial industry completely ignores? By the end of this deep dive, you are going to understand exactly why starting late is actually your ultimate secret weapon. I am going to dismantle the terrifying financial myths designed to make you panic, and I will hand you a precise, aggressive roadmap designed specifically for the 40-something mind and the 40-something income. We are going to turn the anxiety of lost time into the most powerful wealth-building fuel you have ever experienced. We are going to reset the board. The very first thing we must do is destroy the illusion of those sidelines. The financial entertainment complex loves to terrorize people in their late 30s and 40s with generic, mathematically rigid benchmarks. You have undoubtedly read the terrifying articles that boldly state you should have exactly 3 times your annual salary saved in a retirement account by the time you blow out the candles on your 40th birthday. When you read that arbitrary number and then look at your own depleted savings account, the natural human response is total paralysis. You feel so impossibly behind that your brain tricks you into thinking, why should I even bother trying to catch up? But let me tell you the unspoken truth about those magazine benchmarks and the truth about the parents standing next to you at that soccer game. Those perfect benchmarks assume a perfectly linear, uninterrupted life trajectory that simply does not exist for 90% of the population. They completely ignore what economists and psychologists call the messy middle. Your 30s are the most financially devastating decade of your life. It is the decade of pure survival. It is the era of staggering daycare costs, unexpected medical bills, down payments that wipe out your savings, and the sheer bone-deep exhaustion that leads to thousands of dollars in convenience spending just to keep your household functioning. You are often caught in the brutal sandwich generation squeeze, simultaneously trying to fund your children's present while starting to worry about your aging parents' future. During this decade, your financial bandwidth is stretched so incredibly thin that your primary wealth building strategy is simply trying not to drown. You pay a massive premium for convenience. You order the takeout, you hire the lawn service, and you book the slightly more expensive direct flight, all because your most depleted resource isn't money, it is energy. Those financial articles judging your lack of a massive portfolio at age 40 completely fail to quantify the sheer staggering cost of surviving your 30s intact. And what about those people bragging about their kitchen remodels and their European vacations? The vast majority of them are financing that glamorous lifestyle through a dangerous, fragile web of home equity lines of credit, bloated 72-month auto loans, and rolling credit card balances that never actually reach zero. They are heavily leveraged actors putting on a very expensive, highly stressful play. They are wealthy in appearance, but completely bankrupt in actual liquidity. They are terrified of losing their jobs because their entire existence requires a massive, uninterrupted monthly cash flow just to service the interest on their image. You are comparing your messy, behind the scenes reality to their highly curated, debt fueled highlight reel. Once you recognize that the societal scoreboard is entirely broken, you can finally stop playing their unwinnable game and start playing your own. The single biggest lie keeping 40-year-olds broke and anxious is the misconception of time. Since you were a teenager, you have been beaten over the head with the miracle of compound interest. You have been shown that famous chart where a 25-year-old invests a tiny amount of money, stops at 35, and completely beats the person who starts at 40 and invests for the rest of their life. While the mathematical output of that chart is technically correct, the psychology and the practical application of it are fundamentally flawed. That chart assumes that the 40-year-old has the exact same financial capacity, the same mindset, and the same career leverage as the 25-year-old. This is exactly where your hidden advantage lies. We call this concept contribution intensity, and it is the sledgehammer that completely shatters the starting late myth. Think back to who you were at 25. You were likely at the absolute bottom of the corporate ladder, earning an entry-level salary, trying to figure out how to pay your rent, buy decent groceries, and maybe scrape together enough for a weekend social life. If you managed to invest $200 a month back then, it felt like a monumental, painful sacrifice. But you are no longer that person. You are not a beginner anymore. At 40, you are entering the absolute peak earning years of your entire existence. According to decades of economic data, the window between age 40 and 50 is when your income trajectory hits its absolute highest velocity. You have 2 decades of hard-won industry experience. You have an established professional network. You have specialized, highly valued skills, and you have the authority to command a premium salary in the marketplace. You no longer have to play this small, slow game of trying to patiently scrape together $200. With your current earning power and the right strategic adjustments to your lifestyle, you have the capacity to aggressively deploy $2,000, $3,000, or even $4,000 a month directly into wealth building vehicles. Furthermore, you possess something a 25-year-old simply cannot buy: financial scars and market wisdom. The young investor is easily distracted by the noise. They chase volatile meme stocks, they gamble on unproven crypto trends, and they panic sell during their first major market correction. But you have lived through recessions. You have seen bubbles burst. You understand that real wealth building is brutally boring, highly methodical, and requires deep emotional regulation. When you combine this mature, battle-tested psychology with the massive capital injection of your peak earning years, you become an unstoppable financial force. You are no longer guessing, you are executing. This brings us to the most critical action step for the 40-something late starter, the sunk cost purge. When you decide to execute a financial reset in your 40s, you cannot simply trim around the edges and hope for the best. You cannot just cancel one streaming service or stop buying expensive lattes and expect your life to fundamentally change. You need to ruthlessly audit the structural anchors that are dragging down your cash flow. In your 20s and 30s, you spent a lot of money trying to figure out who you were and projecting a certain identity to the world. You accumulated things, obligations, and lifestyle habits that were meant to signal your success to others. You paid the identity tax. Now, you must systematically detach your ego from your expenses. Look at the heavy machinery of your daily life. Do you actually need 2 massive, newly financed SUVs sitting in your driveway, or is that just what is expected in your specific zip code? Are you holding on to expensive country club memberships, specialized hobby equipment gathering dust in the garage, or premium subscription boxes that you rarely use simply because they represent a version of yourself you like the idea of? The sunk cost purge is about looking at your current cash outflow and asking a brutal, honest question. Is this expense actively serving my future freedom, or is it merely funding a past version of my ego? At 40, you have finally earned the emotional maturity to stop caring about what the neighbors think. By aggressively shedding these heavy ego-driven expenses, you instantly liberate hundreds, if not thousands of dollars a month. This is not about living a life of deprivation. This is about intentionally reallocating your resources from the exhausting theater of looking rich to the quiet, powerful reality of actually becoming wealthy. Once you have liberated that heavy cash flow, you must direct it entirely toward the debt annihilation protocol. At 25, carrying consumer debt feels like a normal, almost inevitable part of building an adult life. Everyone has a car payment, everyone has a credit card balance. But at 40, consumer debt is a toxic emergency that threatens your future autonomy. High interest debt is the exact opposite of compound growth. It is compound decay. It is a guaranteed 20 to 25% loss on your money every single year, actively working against your survival. You cannot out-invest bad debt. If you are trying to put a little money into a brokerage account, hoping for an optimistic 8% return while simultaneously carrying a credit card balance that charges you 22%, you are financially bleeding to death while taking a vitamin. To achieve a true financial reset, you must declare absolute, unconditional war on your consumer liabilities. You take the immense cash flow you freed up during the Sunk Cost Purge, and you aim it like a laser beam at your highest interest debts. You do not do this gently. You do not do this patiently over 5 years. You do this with a sense of aggressive, calculated urgency. Every single dollar of high interest debt you eliminate is a guaranteed tax-free return on your investment. As you watch those balances finally drop to zero, a profound psychological shift occurs in your brain. The baseline anxiety that kept you awake at night begins to evaporate. The knot in your stomach at the soccer game disappears. You stop dedicating your peak earning years to paying for the ghosts of your past decisions, and you finally officially begin working to fund the reality of your future. You transition from a state of constant financial defense to a state of absolute financial offense. With the consumer debt cleared and the ego expenses completely purged, your cash flow is now a weapon. You are now ready to implement the most powerful wealth-building mechanism of your peak earning years. In the lab, we call this the invisible raise protocol. As we discussed, your 40s are the golden decade of income acceleration. You will likely receive significant promotions, switch companies for better compensation packages, or scale your own business remarkably during this specific window. The absolute death trap for the 40-something professional is allowing lifestyle creep to absorb these financial victories. When people in their 40s get a $20,000 raise, they typically reward themselves. They upgrade the car to a luxury model. They upgrade the vacations to 5-star resorts. They finance a massive bathroom renovation. Their income goes up, their stress goes up, but their actual net worth remains perfectly stagnant. They just become broke at a higher income bracket. This trap is universally fueled by a highly toxic, culturally accepted phrase, "I deserve it." After 20 years of grinding in the corporate machine, dealing with terrible bosses, and sacrificing your weekends, you feel fundamentally entitled to the physical manifestations of success. Society programs you to believe that a higher tax bracket mandates a higher caliber of consumption. But every time you utter the words, "I deserve it," to justify a luxury car lease or an extravagant purchase, you are literally stealing from your future self to medicate your current exhaustion. You do not deserve a depreciating liability. What you actually deserve is the absolute freedom to never be forced to sit in a cubicle again. The invisible raise protocol requires a profound, unbreakable commitment to yourself. You must mentally anchor your standard of living to the exact lifestyle you have right now, today. From this exact moment forward, every single raise, every year-end bonus, every unexpected financial windfall does not exist in your checking account. It is entirely invisible to your daily lifestyle. Before you even have a chance to adapt to the new income, before your brain can start browsing for a new car, you automatically route 100% of that new money directly into your investment accounts. If your salary jumps from $90,000 to $110,000, you continue living exactly like someone making $90,000. You automate the difference so it never even touches your primary spending account. This requires immense quiet discipline, but the math behind it is staggering. By capturing the entirety of your peak earning income growth, your contribution intensity skyrockets to levels a 25-year-old could never dream of. You are suddenly investing $3,000, $4,000, or $5,000 a month without ever feeling a single reduction in your current quality of life. You are weaponizing your professional success and converting it directly into liquid, unshakable net worth. You are no longer trading your valuable time for a nicer car. You are trading your specialized expertise for decades of future freedom. As you execute this protocol, you must also fundamentally redefine what the next decade of your life actually looks like. When you start late, the traditional societal concept of retiring at 65 can feel like a heavy, depressing obligation. You feel like you are running an exhausting marathon where you started miles behind the starting line. We need to completely shift your psychological goalpost. You are not investing your money to reach a traditional, boring retirement age. You are investing to achieve financial autonomy by the time you hit 50. Financial autonomy is a very different concept than retirement. It does not necessarily mean you sit on a beach and never work again. It means that within one highly focused decade, you have built a dense enough fortress of investments and liquid cash that you no longer have to make life decisions out of fear. It means that if your industry shifts unpredictably, if your company decides to downsize management, or if you simply wake up one morning and decide you are burned out and exhausted, you have the ultimate financial leverage to walk away on your own terms. Autonomy means you can take a lower paying job that you actually love and are passionate about. It means you can finally start that consulting business you have been dreaming of. It means you can take 6 months off just to be entirely present with your family without facing ruin. When you frame your wealth building journey as the aggressive pursuit of autonomy rather than a desperate, panic-filled sprint toward retirement, the entire process transforms from a heavy burden into an empowering daily mission. You are literally buying back the rights to your own life, one strategic paycheck at a time. Let us return to the sidelines of that weekend soccer game. The crisp air, the overpriced coffees, the loud, performative conversations about luxury renovations and extravagant European trips. Only this time, you are standing there with a completely different internal reality. The knot in your stomach is entirely gone. The silent shame has evaporated. You hear the boasting and the posturing around you, but instead of feeling behind or inadequate, you understand the fragile, debt-fueled house of cards that supports their shiny lifestyle. You no longer feel the desperate need to interject with your own impressive purchases because you have completely detached your identity from what you consume. You know that while they are directing their absolute peak earning power toward massive interest payments and rapidly depreciating assets, you are quietly, aggressively building a fortress of true financial autonomy. You are flawlessly executing the invisible raise. You are leveraging your massive contribution intensity. You are turning the supposed disadvantage of starting late into your ultimate, highly focused superpower. Starting your wealth journey at 40 is not a financial death sentence. It is a profound, life-altering awakening. It is the exact moment you stop playing the world's exhausting game of optical success and start playing the quiet, ruthless, highly rewarding game of actual freedom. You have the emotional maturity, you have the peak income, and now you have the exact strategy to change your entire family's financial trajectory in a single focused decade. The clock has not run out on you. The real game is just beginning. Now, I want to hear directly from you. Look at your life right now. What is the single biggest ego expense or sunk cost you are holding on to right now that you know deep down in your gut is holding back your financial reset? Is it the car, the country club, or the zip code? Be honest with yourself and drop it in the comments below. Naming the anchor is always the very first step to cutting the chain. If this deep dive shifted your perspective on what is actually possible in your 40s, make sure to subscribe and share this video with someone who needs to hear this truth today. Remember, your age is just a number on a calendar, but your financial autonomy is a daily choice. Make the right one today. My name is Rob, and I will see you in the next video.